Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is Friday, the 28th of July. My name is Russell Shaw, I'm a senior market specialist at FXCM, and my email address rshore@fxcm.com. Just going to go ahead and bring up the disclaimers, and I'll keep these on screen for a few moments. I want to apologize for being late this morning. I had to change browsers. I was having problems logging in, so my humblest apologies there. I'm just going to keep the high risk investment warning on for a few moments. Hey Raj, good morning to you and welcome. Okay, and here is our market commentaries disclaimer. Good morning, Howard. Lovely to have you on the webinar as always. Thank you for joining. Okay, and just our references, MarketScope 2.0 and tradingview.com. All right, let's just go through to MarketScope. Taking a look at the euro-US dollar, we had quite a deep pullback in the euro yesterday because I felt quite surprising. The reason I think is twofold. So you can see, here's the pullback in the euro. So what we had yesterday was the ECB, and I think the ECB perhaps tilting towards hawkishness, but there were some dovish overtones, and I thought that was interesting. Before, the ECB has been on autopilot with raising rates. They're no longer on autopilot. They now are, as they've called it, data dependent. Next ECB meetings in September, and it's not guaranteed that we get a rate hike there. And that's why I think some of the weakness in the euro manifested. At the same time, we saw strong US GDP, we saw strong core durable goods, and initial unemployment claims came in better than expected. So we had strength on the US dollar side and weakness coming in from the euro side. Quite surprising, but it's always worthwhile being cautious when there is a central bank meeting, and we did mention that yesterday, and the reason is because of these surprises, pulled back. Let's just go through to the weekly chart here. I'm still looking for next higher trough here, and subject to correction, right? So we're just going to have to monitor this and see if we do get the higher trough, or if we get, I'd be very surprised if we get this, but you don't want to discount it. Lower peak, lower trough. Okay. If you go through to the daily chart, you can just see how it's in zone 2 still. Yesterday we said we were looking for a reference candle reversal. We still haven't got it. We haven't got that condition 3. See, without that third condition, you've got nothing. So that's very, very interesting. So we're just going to keep on monitoring this, and I think we can extend this to there now, and we can pull that down to there. Okay, so there's where the next test is for the reference candle reversal. Interestingly, the momentum has shifted to the downside now. What's really, I think, impacting on euro-US dollar, besides the strong data out of the US, is the fact that the ECB is no longer on autopilot. And the question is, well, why are they no longer on autopilot? And for that, we're going to go through to TradingView, and we'll just take a look at, well, here's the euro area manufacturing PMI, and the economic conditions are quite weak, specifically in manufacturing. So you can see here's the here's the 50 line. Let's just make this 50. And 50 is the line in the sand between expansion and contraction. Well, we are way under 50. We're at 42.7. So manufacturing activity in Europe is contracting. What we can do is we can take a look at the Euro PMI on the services side. That's still expanding, but we're borderline. We're at 51.1. In fact, Germany's GDP is negative, right? So that economic activity has now started coming into the press conference, President Lagarde's press conference, and we're going to see now what potentially can happen, and this will be interesting, and I've got to think about this very carefully, is if the economic data continues to disappoint and inflation continues to come down, ECB may be done. ECB may be done, which would be quite a change from what I was thinking yesterday. But we'll have to be quite savvy and just monitor that. All right. So I felt yesterday was a bit of a surprise because there was really a potential for the higher trough to come in higher. It didn't happen. Okay, so we've now shifted from almost being active to being reactive again. Let's go through to the US dollar and do a top-down analysis on the US dollar side of things. And then I want to go through to the DAX, because we have spoken a fair amount on the DAX as well, but I just want to consider the US dollar first, the US dollar's trend. We'll start with the weekly, and what we'll do is we'll work our way down, so doing a top-down analysis on the US dollar side of things. I'm just waiting for US dollar to come up on my market scope. What I'll do in the meantime is I'll just bring it up on TradingView just in case it's misbehaving. Okay, we'll go through to the weekly chart here. Just before we do any work on TradingView, let's just consider market scope once more. All right, it's just freezing, so I think it's better for us to do it on TradingView. Let's make this logarithmic. And peak, trough, lower peak, lower trough. Where is the next lower peak? Okay, it's become a little trickier because of the strong dollar reaction yesterday to the GDP number, the core durable goods number, the initial unemployment claims number. So you can see that it's still possible to get the lower peak, but the makeup of this candle is quite interesting. Take a look at the shape of it. Sort of a hammer hanging man, so to speak. We had price pushed down to the low for the week. What happened at the low is that the bears lost control. The dollar bulls now have ripped control away from the bears, and they've actually pushed price higher than the open. We're trading higher than the open for the week. Let's go down to the daily chart. Okay, so we're back now on market scope, and we've now pushed above that 50% Fibonacci. What we can do is we can take a look at the 61.8. So let's just pop that in. We'll take the 50 out. Let's mark this a little thicker. And you can see we're right now on the 61.8%. And what we can do here is see if there's some sort of reaction off of this level. So potentially still getting 1, 2, but there's more work to be done here. Okay, it's not is not quite as simple as it was yesterday. The technical picture has altered with dollar showing more strength than it was showing yesterday. Let's just go down to the hourly, and I think that the let's just take out our, we'll just take out all the labels here. And what we can do is we can look at the R1 level. So the R1 level, I think, would coincide quite nicely with the 61.8% fib, so a deep pullback. Okay, remember, we're still looking at the lower peak, lower trough, lower peak scenario. Thus, I think the resistance areas now become very interesting. We take a look at 61.8%. Not so much because 61.8% is a magical number. I don't believe that, but I think that Fibonacci's are self-fulfilling prophecies. So we want to see if there is some sort of reaction there. Go down to the hourly, and the R1 level, I think, is the key level for us to watch to see if there's some sort of reaction there. Let's just go back to the euro, take a look at the euro hourly chart. And I think that the R1 level on the dollar corresponds with the S1 level, on the euro. Let's go through to the euro and put in a fib here. See if we get a 61.8%. It's actually slightly deeper. Let's put in the 76.4. And I'll mark this off a little wider. Yeah, okay, so deep pullbacks, and now we want to see with the deep pullbacks, does the primary trend resume? And it's really all about primary trend now. Okay, let's just take a look at the DAX. It's a very interesting chart. We looked at it earlier in the week. We were looking for a weekly pivot point there, or a reference candle reversal. So let's go through to the weekly. Now take a look at this. Today's trade is going to be very interesting on DAX because we've got condition 1 here. Okay, here's condition 1, and here is condition 2, 3. So we're getting the potential reference candle here. Take a look at the 30-week exponential moving average. It's moving in that northeasterly direction. What does this all mean for us? Okay, well, we want to see how DAX closes on the day. If it closes with all 3 conditions, then what we can do is take a look at the weekly chart, and specifically the 16,300, 16,400 resistance levels. Every time we've gone through there, there has been a strong reaction. Okay, so you can see, go back all the way to November 2021. Here's another reaction. Here's another reaction. Okay, I just want to move this way. There we go. And now we are testing those all-time highs again. And that's really what we said we wanted to be looking out for. And I think that it's very interesting, this position. And we may, in fact, close with a nice reference candle reversal. What we've got to just watch is this resistance area here on the daily. Just watch this resistance area, okay, on the daily. One other chart I want to look at is the oil chart, because commodities are starting to move. The commodity indexes have a big weighting towards energy. So let's just bring up the UK oil chart and just do a last analysis on that. And I think it's doing really well. It's got trough peak higher trough. Here is the reference candle reversal. It's now pushed above that 30-week exponential moving average. That 30-week exponential moving average starting to curl up, and we're starting to move towards the key level that will give us the higher peak. So oil starting to make a move, and if oil's starting to make a move, I suggest we watch commodities. Yesterday we looked at the Thomson Reuters Jefferies CRB index, and we looked at the commodity currencies. And what we can start doing, I think, from next week is seeing if the commodity currencies are showing signs of life. So you go through, say, to the Aussie US dollar, okay, and we want to see if there is something to be said about the Aussie. We go through to the, do we have the Kiwi here? I don't have the Kiwi here. We'll take a look at the Loonie. Okay, we'll take a look at Kiwi next week, take a look at Rand, and we want to see if there are going to be some sort of movements in Aussie, Loonie, Kiwi, Rand, all the commodity currencies potentially starting to move because the commodities are themselves starting to move. All right. If there's any questions, please go ahead and type those in. Any questions, go ahead, type those in. Again, apologies, I was late this morning, just I was not logging in, had to switch from Chrome to Edge, and even Edge had to had a bit of trouble. All right, let's wrap up here. Thanks very much, Raj. Guys, have a good weekend, and we shall speak Monday morning. Thanks very much, everyone.